Hello everyone, and thank you for joining this Your Overseas Home webinar. My name is Roseanne Bradley. I will be your host for today. Today we're chatting to Bradley Coldicott from Chase Buchanan Wealth Management about the finance and tax essentials of moving to Portugal. It's great to see so many of you with us today, whether you're watching live or on demand. Before I hand over to Bradley, you'll be happy to know that we have secured a date for our next virtual event, which will be held on Saturday the 16th of March. If you're new to Your Overseas Home, it's a fantastic property show that you can attend from the comfort of your own home. It's designed to arm you with all the tools and connections you need to buy confidently overseas. We have more experts joining us in March than ever before, including Chase Buchanan. So get your e-ticket today and save the date. I believe there should be a link popping up just around now. And I'll hand over to Bradley.
Thank you, Rosie. Good afternoon, everybody. I hope you're all well. Today, I'm going to be sort of running through a couple of things, really. A bit about Chase Buchanan, who we are, what it is we do here at Chase Buchanan, where we're based across our sort of European reach, and also then sort of talking in a little bit more detail about Portugal, all the sort of key considerations you need to be making when looking at moving between countries and into Portugal. So to kick things off, who are we? Who are Chase Buchanan? Chase Buchanan are a highly regulated wealth management company. So we specialize in giving cross-border tax-led financial advice to expatriates who are moving from various different locations across both areas of Europe and, of course, non-EU areas such as the UK, the USA. What we specialize in doing here at Chase Buchanan really is providing global financial solutions for expatriates around the world. It can always be really, really tricky when you're moving from one jurisdiction over to the next. It's really tricky to understand the sort of status and the state of play, really, of that new country's tax jurisdiction. It can get quite confusing. It can get very complicated. And what we're here to really do is to sort of untangle that web and make things as simple as possible for people who are looking at moving between anywhere really into Portugal in this case. Now we provide sort of clear, unbiased, jargon-free financial advice. The main aim of that really is to make sure that when we're sort of dealing with all of our clients, we're keeping things as simple as possible and ensuring that you are being well looked after, essentially. Of course, as it says down below, we consistently sort of pride ourselves on the level of service that we give to all of our clients across our European jurisdiction. Now, by way of introduction as well, I am the Senior Business Development Manager for Chase Buchanan here in the Algarve in Portugal. And what I'll sort of do is I'll sort of go on to where our other office locations are based. But dialing in today, I'm coming from sort of quite sunny, actually. It's about 21 degrees here in Portugal, which is a lot nicer than back home. So our services, what is it we do at Chase Buchanan? It's very similar to that of a traditional sort of UK or otherwise based financial advisor. We cover a sort of holistic planning process, so to speak. So taking into consideration all areas of sort of financial planning, looking at sort of any investments that our clients have got that are based from, for example, the UK. You're looking at sort of then into your sort of pension analysis, pension transfers, potentially depending on circumstance. But that sort of comes into play as the whole wider piece of the financial planning process. When you're moving from one jurisdiction to the next, and it's quite daunting especially when you're looking at potentially retiring. And what we look to do is complete that wholesale sort of financial planning process from start to finish, making sure that we're getting as much information about you, understanding each of our clients as best as physically possible, and sort of going from there. Now, outside of that sort of UK style and that sort of potentially Irish style as well, We also give advice to US expatriates who are coming from the United States. So for those on the call today that are from the United States, we are also here to help and to serve you as well, I suppose. And finally, outside of that remit, we've got sort of education fee planning. Again, can be a critical part of the planning process, ensuring that if you have children, you're going to be sort of sending them to potentially an international school, for example, when moving overseas, that planning process has been covered. And finally, the sort of life and critical illness care as well. Now, our offices, where are we based? As you can see by the sort of globe on the screen and the sort of the list below, we have a number of European flagship offices. We have an office here in the Algarve in Portugal. We've got a number of offices in Spain, offices within the Canary Islands, Cyprus, Malta, Belgium, France, and of course in the USA and Canada as well. And I think really what the message there, and the reason why we like to include this when speaking to people, is that it gives us these, it should hopefully breed home that we're there to sort of, wherever it may be that you decide to go, whether you look to sort of, life can be quite unpredictable sometimes. And when you're moving from one jurisdiction to the next, it can also transpire that you move again. And what we're here to sort of, show really is that wherever you may be in the world, we are, of course, here to make sure that you are getting the best advice, the best help possible at all times. We don't shirk away from our responsibility to make sure that even if you do move country, we're there to sort of help. Now on to Portugal. What are the sort of essential areas, and what we've listed here is some of the key considerations to sort of think about when talking about Portugal from a tax and a financial angle. There are two, as you can see, there's two very topical sort of areas of conversation that I'll touch on today as well in the Golden Visa and an HR scheme. Within the space of the last 12 months, there have been some quite stark changes to those regimes here in Portugal. And I'll touch upon those in a little bit of detail as well. But sort of, looking at sort of what key considerations do you need to make if you're considering a move to Portugal? These are the sort of key areas we're looking at. We're looking specifically into capital gains tax today. So what I'll talk to you a little bit about is exactly how can capital gains implicate you if you move to Portugal? What sort of potential tax pitfalls are there if you move to Portugal? How can they be mitigated around? And how do we sort of, how can a robust financial plan help you to make sure that you're taking advantage of all of those available tax breaks in your new country of residence? We're all familiar in the UK, certainly, for example, of investment saving accounts, stock and share ISAs, pension schemes in the UK. When you move away from the UK, you move into places like Portugal, these can pose some quite tricky sort of sets of circumstances. So it's important to make sure that we are planning around those areas. So to start, when we're sort of considering what deems tax residency and what deems you a tax resident here in Portugal, there's three key sort of criteria, I suppose, is probably the best word, that can deem you a tax resident if you are spending a substantial amount of time in Portugal. For those of you who are UK nationals and are now subject, and US, now subject to sort of the non-EU ruling. So, when the UK left the European Union, we lost our sort of freedom of movement into the European Union and the ability to spend over 90 days within 180, the new Schengen ruling. Ultimately, these are the sort of, these are now the key things to sort of consider. So if you live in Portugal for over 6 months, 183 days or more, that will qualify you as a tax resident. Now, those of you who are from the UK, ultimately, you would need a visa in any case to be able to do that. But it's still something to be wary of. Spending over 183 days in Portugal will deem you liable for taxation here in Portugal. The second of those three criteria is the main residential home in Portugal. So if your main residential property is actually physically based in Portugal, this will also deem you a tax resident in Portugal for tax purposes. And Portugal taxes people on their global income. So it's a really, really important thing to take consideration of. Where is your main home based? Where do you spend the most amount of time? And finally, where are your assets located? If your assets are primarily located within Portugal as well, this is also something to really, really sort of take notice of, because this will again deem you liable for taxation here in Portugal on your global income. And it's really, really important to make sure that if you do become a tax resident, you are taking every precaution and every step possible to making sure that you're going to put yourself in the best position possible. So going on to the Golden Visa, now early 2023, there were some sort of changes to the Golden Visa program. It used to be that in Portugal, you could purchase a property for over 500,000 in certain areas of Portugal because of the landscape here in Portugal. You could sort of obtain a Golden Visa by property purchase. Now, as you can sort of see here, that is no longer the case. The Golden Visa is set to be abolished in Portugal. However, as it stands, there are two sort of main sort of criteria to meet if you are looking to continue down the Golden Visa path. You've got sort of qualified investment funds and also investment into creation of local organizations. Now, you would need up to 500,000 euros investment in order to be able to qualify for this regime and to qualify down the Golden Visa pathway. But as you can see here, there are several benefits to the Golden Visa. You would only need to spend sort of 7 days in Portugal on a calendar basis in order to sort of qualify for the Golden Visa and maintain that Golden Visa status. It allows you freedom of movement within the European Union. It's valid for 5 years. And after that 5 years are up, you can then apply for permanent residency. And for those who are looking to secure a European passport, certainly, if you get permanent residency, this can then open the door to then potentially go on and qualify for a Portuguese passport in the longer term as well. And it also allows you the sort of family reunification as well. So if you have family members that you are looking to move to Portugal with, this is also quite a useful sort of visa road to go down, if that makes sense. Next up, and I think this is probably going to be the topic of conversation with the most questions levied, is the non-habitual residence regime. As some of you or most of you may have seen, the Golden Visa, the non-habitual residence regime has been abolished in Portugal. There was a lot of toing and froing at the back end of last year between the Portuguese government as to it sort of came out one day that the NHR has now ended and will be no longer applicable to new applicants. It then was reversed. It was then reversed again. And we are now in this sort of standstill where the NHR has expired. I suppose the caveat to that is for those of you who may be at the early stages of looking to move to Portugal, maybe already purchased property or may have already secured a rental agreement in Portugal, amongst another of sort of the qualifying avenues into obtaining tax residency here in Portugal, is that if you are seen to have been coming forward for tax residency at the back end of 2023, there has been an extension to the NHR window, which would potentially allow you until the end of the year in order to sort of come forward under the NHR and qualify for that 10-year tax break. And we're more than happy to answer questions on that as well and sort of give you some further information on exactly what those qualifying measures are. But for those of you who may not actually know what I'm talking about, the NHR is a tax regime for expatriates here in Portugal. Essentially, it's a 10-year status whereby certain income sources, certain assets carry quite good tax benefits and quite advantageous tax breaks. So, for example, you have sort of pension income tax, foreign dividend income tax, and also tax on interest and royalties. For example, with pension schemes, this is taxed at a 10% flat rate for a period of 10 years. And in the case of dividend income tax, this is taxed at 0%, likewise with interest or royalties. So those are some of the key sort of tax takeaways from NHR. Now, sort of, who is it for? It's for expatriates who are moving to Portugal, who have moved to Portugal. It can be anyone within the EU. Anyone who's applied under a D7 or D2 visa is applicable to apply for NHR. And to qualify for the NHR scheme, you need to ensure that you have not lived in Portugal for the previous 5 years from a fiscal perspective. So that's 5 calendar tax years. Providing you haven't done that, you would be eligible for NHR. You've not held NHR status before. As good as it may sound to sort of spend 10 years on the NHR and then try and refresh it again, that's not how it works here in Portugal. If you have sort of previously held NHR status, you can not apply for NHR again. There is one caveat to that in the sense that you can take a 12-month break out of the NHR window. However, it is only a 12-month period that you can do that for. And you also need to ensure that you have lived in Portugal for a minimum of 183 days. So as I sort of mentioned at the start of this, NHR, there's quite a lot to sort of go through with the NHR process. There's lots of different caveats, especially with the sort of news that's come out about NHR. And if anybody's got any questions, do feel free to type them in the chat box. I'm more than happy to answer any questions. Moving on to capital gains tax. So capital gains tax here in Portugal is levied at 28%. So it's a flat rate of tax. There's no sliding scale to capital gains tax here in Portugal. And there's some quite big concerns when it comes to capital gains taxes if you're moving from the UK, for example. There are, for example, the 2 or 3 main areas really that capital gains tax can become quite a big concern are on sale of property, sale of investment assets, so shares, UK investment bonds, anything like that, and also then businesses. What can actually happen is, because there's lots of tax benefits in the UK, which I'll go into in a little bit more detail as well, because there's so many tax benefits in the UK, when you move away from the UK, Portugal then sort of will assess your overall situation, and capital gains tax can then be sort of payable on those assets. So when you're looking at moving away from the UK, the key sort of concerns really are looking at property sale. The capital gains tax will be payable in the UK. However, there may be a potential top up sort of tax in Portugal. Because of the fact that you lose what's called your main residence exemption. So if you're selling your main property in the UK, that typically will go down as capital gains tax free in the UK. However, if you sell that once you're a Portuguese tax resident, ultimately there may be tax to pay in both the UK and sort of top up tax additionally to that here in Portugal. Now, the good news is that here in Portugal, there is no wealth tax. So there's no overall wealth tax. There's no sort of taxation on your overall wealth. One thing I did forget to mention there, apologies, is that capital gains tax on UK share sales are also payable purely here in Portugal. So moving from that, wealth tax is nil. Property tax on over 1.2 million. There is a property tax that is payable here in Portugal. You also, for those of you who are looking to establish businesses here in Portugal primarily, there is VAT here in Portugal. So you have that between a rate of sort of 6 and 23%. And finally, and probably quite a big area really of our planning that we help people with here in Portugal is inheritance tax. Inheritance tax in Portugal is nil. But UK domiciles living in Portugal, this is really, it's quite a big area of conversation really when it comes to sort of domicile status, UK inheritance tax. IHT liabilities overall. IHT has become a really big thing in the UK. IHT receipts have been at an all-time high this year, and it's been on the rise for a number of years now. It's really important to understand your overall IHT position when you're looking at moving to Portugal, or you already have, because it's such a wide open area. And that's something we can talk to people about as well. You know, assessing your overall IHT liabilities. How can you mitigate inheritance tax in the UK? Because it's not as simple, unfortunately, as just jumping on a plane and your IHT worries go away. There are lots of steps that need to be followed to sort of mitigate that position down. Moving forwards onto some sort of the areas of sort of tax planning. We've got sort of, you know, there's lots of different things to sort of consider when looking at you know, an overall tax planning position. You're looking at sort of the fact that now that you're in Portugal, as I mentioned earlier in the call, now that you're in Portugal, you're in a totally different landscape. You know, it's not just the environment around you that can be very different. Sometimes it's also the actual rules that can be really, really different when you compare Portugal to the United Kingdom, for example. And it's really, really important to make sure that you are speaking to people, especially when you move from the UK, USA, Ireland, anywhere like that, anywhere, those kind of areas, and anywhere really from the European Union. It's really important to understand the cross-border side, because it's not just as simple as looking at things from a page half turned aspect. Making sure that you have a thorough understanding of the UK side, what liabilities to tie up from the UK side are, what Portugal looks like on the other side, and how you sort of better your position and mitigate your tax position is extremely, extremely important. Now, also in and amongst this, you have the ability for, you know, in particular, and this has been a really, really big piece of what we've been speaking to a lot of clients about recently as well, is holding UK advisors when living in European countries. If you have a UK financial advisor, ultimately what you will find is that those UK financial advisors will be regulated and authorised by the FCA in the UK. Now that the UK has left the European Union and Brexit has sort of put a wedge between the UK and the rest of the EU from a legislative standpoint, when it comes to the financial services industry, it's really, really important to understand how that may affect you if you have a UK financial advisor. You know, all the things that you go to your UK financial advisor about. You know, it's important in your conversations with your financial advisors in the UK as well to establish that you are looking at moving overseas, making sure that you're speaking to an advisor who has the correct level European regulation, and sort of going from there is a really critical part of your overall financial planning position, really. Now, sort of subjecting it and becoming more sort of specific, looking into sort of UK pensions, there's a couple of considerations as I sort of veered to earlier on. When speaking to people with UK pensions, there's some really, really sort of critical things to consider when it comes to UK pensions and UK pension legislation and how these are affected when you move away from the UK. The first of which is what's known as a tax-free lump sum, so a pension commencement lump sum. When you are departing the UK and you are looking at sort of your overall pension planning, and typically when you reach 55, you become eligible to sort of take the tax-free lump sum out of your pension, and you can utilise various different sort of strategies and methods to take the remainder of the income from your pension scheme that you've worked hard to sort of accumulate. It's really important to make sure that you understand when you're leaving the UK that if you do leave the UK and haven't taken that tax-free lump sum, this can become taxable in your new country of residence here in Portugal. Tax-free lump sum, the taking advantage of that tax-free lump sum, that PCLS, as it's also known as, is a critical part of the process, because once you leave the UK, it's an exclusive benefit for UK tax residents to have that tax-free lump sum. And when you leave the UK, it's really important to make sure that you have either taken that, if it's all applicable, and if it's viable for your current situation, or going to help you. Bearing in mind, pensions are free of inheritance tax estates, so it does get added into your potential estate. However, typically, you know, when you're looking at sort of leaving the UK, it's really important to take that tax-free lump sum before you do get on that plane and move to Portugal in this case. You've also then got sort of the different considerations to sort of think about. And the two that we sort of specialise in helping people with are considering SIP and QROP transfers. A SIP is a very common pension vehicle in the UK. It's a very popular type of pension scheme. It stands for self-invested personal pension, very similar in build-up to a private pension. And it's, you will find a lot of people do take advantage of the advantages that SIP offers. Typically, it offers much more sort of flexibility in investment strategies, all of those kind of key things. When you leave the UK, if you have a managed SIP or a managed pension scheme, and you have a financial advisor acting on your behalf, managing that pension scheme, it's always important to understand that ability to be managed by that financial advisor may disappear. And that's why maybe sort of considering potentially transferring into an internationally focused SIP, managed by an international advisor who is regulated within the European Union, could be worthwhile looking into. Same note as a QROP, stands for Qualified and Recognised Overseas Pension Scheme. Ultimately, these host slightly more tax benefits to a SIP in the UK. They're slightly different in build-up. One big area that has changed as well recently is the lifetime allowance in the UK, which some of you may be familiar with. And one of the key benefits of a QROP transfer will be that if you sort of transfer before your pension hits that lifetime allowance, ultimately you can sort of almost freeze that liability and allow your pension to grow tax-free well into the lifetime allowance and thereafter. Whereas in a SIP, in a private pension in the UK, that's not a possibility. However, as the lifetime allowance has been abolished, we are just sort of hanging on to see what comes over the next 12 months as to whether this will be reintroduced, I suppose. Now, with UK pensions as well, you will have sort of potentially different tax rates to offset potential NHR changes. This is something we can discuss with you in a lot more detail, exactly how pensions are taxed here in Portugal, how NHR affects that taxation difference, and how you can sort of best position your UK pensions now that you're living in Portugal. Moving on to UK ISAs, these are taxable in Portugal at 28%. So, when you're looking at sort of UK ISAs, it's really important to make sure that you understand that these aren't compliant here in Portugal. They can potentially open up some additional tax liabilities, and it's important to make sure that these are essentially exhausted if they're invested in stock and shares. It's important to understand that those need to be sort of cashed before you can sort of to minimise your tax liabilities. Same with stocks and shares overall. The key consideration here is to make sure that you conduct a sale of those type of assets before you depart from the UK. Moving then swiftly on, I'm conscious of time as well. I think I'm sort of running ever so slightly close to the wire. But, when you're looking at the financial planning piece, we've got sort of UK property, income and gains are taxable in the UK. Again, potentially some top-up tax here in Portugal. For those of you on the call who've got Irish pensions, it could be worthwhile considering a transfer into an Irish pension scheme or transferring your Irish pension scheme. There are lots of different options with regards to sort of Irish pension scheme holders. And the key thing here is looking into, specifically into approved retirement funds. These are still taxable in Ireland at marginal rates. It's really, really important thing to consider here. So if anybody's got any questions about Irish pensions, happy to sort of answer those as well. And finally, looking into sort of state pensions, these are paid gross in the UK, taxable in Portugal. So these are taxed here in Portugal, unlike your civil service pensions that are taxed in the UK. And then into the sort of final area, you've got Portuguese compliant investment bonds. This is an area where we can really, really look to sort of help people. And it's an area that can provide quite a lot of benefit to those who are living in Portugal. These are taxed very favourably here in Portugal. There's no capital gains tax on the growth. And what you will find is that as you withdraw income from a Portuguese compliant investment vehicle, your rate of taxation reduces over a period of time. In line with NHR, this period of time is around about 10 years. So if anybody's got any questions on any of the financial planning process and how we can help here in Portugal, do feel free to get in touch. And that is everything from me. I hope that has been useful. Apologies if I've sort of slightly close to the wire. But I will sort of now, I will now allow for, ultimately, if anybody's got any questions, happy to sort of answer any questions. I think there's quite a few actually, isn't there?
There is indeed, yes. I will say that we have cut it quite tight, but we did start a couple of minutes late, so don't worry, we'll carry on for another 10 minutes.
Yeah.
The first question is someone's just asked, will you get a copy of the recording? Yes, this webinar is recorded and we'll be sending you an email link tomorrow with a link to rewatch it if you want. Okay, so we've had quite a few questions about using Chase Buchanan services. So I am aware that you do free consultations,
Absolutely.
but how do you kind of assess the fees in that sense?
Absolutely. So look, I mean, especially when you're moving away from the UK, it's such a big area. There's lots of things to take into consideration. So in terms of sort of how we sort of, how we structure our fees and how we work our fees, ultimately we are free of any obligation. So we do offer free no obligation consultations. There we go, got it actually. And what we will then look to do is just sort of see how we can help, in which way we can help. At that point, if there is anything we can do to specifically help you, ultimately what we will do is we will sort of provide our sort of, I suppose, a breakdown of everything we can do to help in what's known as a report. Within that report, we'll run you through it. We'll run you through all of the fees involved, any fees involved, and just sort of take you through from there really, and make sure that you are fully aware of every single fee that is implicated within our process.
Mm-hmm. So is it kind of specific to, each person's requirements?
Yeah, because, I think the key thing here is that everybody's circumstance is very different. People have got totally different sets of circumstances. Not everybody has gone down the same road of retirement planning. Lots of people invest into property, into businesses, into ISAs, pension schemes. So what we need to do from our side in order to be able to make a recommendation is assess your sort of overall position, assess any recommendations we're giving, assessing any sort of, any difference, any specifications on tax planning, all that kind of stuff becomes quite a big process. So that's why we can't really just give a flat out figure. This is how much.
Fee.
Yeah, absolutely.
That makes perfect sense. Okay. We've had a question from Raquel. She's Portuguese and has a Portuguese passport, but's never worked in Portugal. Right, she's always worked in the UK. Would I automatically be considered a tax resident because I have a Portuguese passport, even though I've never worked here?
Again, it's not necessarily, it depends, I suppose in Raquel's circumstances, it depends on how long you're looking to spend in Portugal, how much time you're looking to spend in Portugal. Just because you've got a Portuguese passport, if you don't spend 183 days here in Portugal, and as we covered off in the presentation, your main home or your sort of assets aren't based in Portugal. Certainly if you work elsewhere as well, as long as you don't spend 183 days here in Portugal, it's not going to deem you a tax resident. It's not going to leave you liable for taxation here in Portugal. However, once you spend over that 183-day threshold, that is what opens the door to tax residency. That will leave you liable for taxation here in Portugal.
Gotcha. Thank you.
Good stuff.
John has asked, how do you certainly change domicile of choice to Portugal?
That's a very, very, very complicated question. Look, I think, there's lots of different I suppose, cogs to that engine is probably the best way of describing it. It's not just as simple as I mentioned. It's not just as simple as going, my bank account's now in Portugal, my house is now in Portugal. There's lots of things to consider when it comes to UK domicile status, and it's what we call deeming a domicile elsewhere. It's a very complicated process. There's lots of different things to take into consideration before you can deem your domicile elsewhere. So I think the best advice the best answer to that question really is that what we can do is we can sort of talk you through those steps. Again, it's not a household answer because everybody's circumstances are very different. And it can take some people a lot more work and a lot more effort than it can take others to sort of deem a domicile elsewhere. So, we're more than happy to sit down with you and go through exactly what qualifies your domicile status as a deemed domicile in Portugal.
Thank you.
No problem at all.
Okay, Suzanne has asked, is there no double tax scheme between Portugal and the UK?
There is, yeah, there is a double taxation agreement in place. There is a double taxation agreement in place here in Portugal, and it's, I think, what that does is it protects from being taxed on the same asset twice. That's the key thing here. Ultimately, it doesn't mean that you can't be taxed on the same thing. Like, for example, rental income. You've got rental income tax to pay in the UK, but then you have top-up tax to pay in Portugal. What you'll find is if you're paying tax in two jurisdictions, you will just pay the higher rate of tax rather than tax both sides, if that makes sense. It's to prevent you from being double taxed on your assets. But yes, there is a DTA in place between the UK and Portugal.
Okay, that's fab, thank you.
No
Arthur's asked, he purchased a house in 2021 and has acquired Portuguese nationality through marriage. Does he have to file taxes?
Could you repeat that for me, Rosie? Sorry, I missed that.
Don't worry. He purchased a house in Portugal in 2021 and has since acquired nationality through marriage.
Right, okay.
Does he have to file taxes?
Again, depends on where you're spending 183 days. I would say depends on 183 days. We're more than happy to go through that in a little bit more detail, understand the nuts and bolts of all of that. But the long and short answer is 183 days is the critical thing here.
Okay.
No problem at all.
We've got another question. Do tax liabilities in Portugal apply to savings accounts as well? Raquel's asked, would I need to transfer the money into a Portuguese account to avoid tax liability?
Yeah, this is a tricky one. It's always a tricky one because there's so many different stances. I think the best thing to do in a circumstance when it comes to sort of savings accounts, I mean, look, it depends, there are sort of, I suppose capital raising saving accounts in the UK. And that's where especially capital gains tax comes into play, is when you're gaining on capital that you've already made, right? It's when you've got an asset, it increases in value. That's where capital gains tax comes in. I think sort of what we can do is in circumstances like this, again, I think it's probably just best to sort of understand exactly what the savings account looks like before giving a sort of ironclad answer on that one, if that makes sense.
Mm-hmm. Perfect. Thank you.
No problem at all.
Just to clarify for everyone else, because Peter's asked a very good question.
Yeah.
Sounds like if you apply for residency, is that different to tax residency?
Pre-Brexit, yeah, this is a difficult one because the visas, the D7 and the D2 visas, which you may be familiar with here in Portugal, they do require you to spend 183 days minimum, which automatically requires you, sort of qualifies you as a tax resident here in Portugal, if that makes sense. So that, pre-Brexit, they were two very different things. For UK nationals nowadays, they're not really two different things, if that makes sense. You would need to sort of file your taxes if you are looking at going down the visa routes that are applicable nowadays. Oh, Rosie, I think you're on mute.
Thank you. Okay. John has asked, have you got a checklist of things to do for a UK resident moving to Portugal and buying a property there for both retaining UK residency and Portuguese residency?
Absolutely. What we can do, John, what we can do is we have actually created a published document that's a sort of moving overseas checklist. So we're more than happy to send over a copy of that if we can sort of, I'm assuming we can get that across to you somehow. That's not a problem at all. We can copy a copy of that. Yeah,
if you just want to jump onto the next slide.
Absolutely.
There's Bradley's contact information. We will be forwarding your questions on, so he can get in touch with you if we haven't got around to answering your question, or you can book a free no obligation meeting with him by scanning the QR code using the camera on your phone.
Absolutely.
Let's just do one final question before we log off. Andrew has asked, is the NHR scheme closed to new applicants?
It's it is closed to new applicants for those who are looking at moving to Portugal now. Unless you have sort of begun that process already, it's not going to be available to apply for. If you have gone slightly down the process, it's something that we can absolutely discuss with you as to what exactly qualifies. Because again, there are lots of sort of different noises around what qualifies you to be able to apply on NHR and what may not. So it's quite a sort of open area. But the long and short is, if you're looking at moving to Portugal now, moving forwards, yes, you're absolutely correct. It is closed to new applicants.
Thank you so much, Bradley. That is about all we have time for in today's session. So thank you so much for all your insightful tips and advice.
Thank you very much. Pleasure to speak to everyone, and thank you everyone for joining as well.
Yes, thank you for all your questions. We strongly recommend that you get in touch with Chase Buchanan directly to discuss your requirements in detail. We will be in touch with their details should you not be able to get them from the screen. Before we finish, I would like to invite you to grab your ticket for the virtual event, which is coming up in March, and feel free to leave us a review on Trustpilot if you found this webinar helpful. So thank you to all our listeners, and happy property hunting. Bye.
Bye. Thank you, everybody.